Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 14th. My name's Eric Wilkinson and you may very well recognize me from mainstream media as the Wolfman. What I'm here to do is not only talk about economic data, the overall markets, but options and how to implement those option strategies in your portfolio so that you can increase your probabilities of success, therefore increasing that yield in that overall portfolio. Anyway, without further ado, let's get on with the economic data across the pond. We got German preliminary GDP coming in at 0.1%. That was supposed to be a negative 0.1%, so nice beat there. Then French final CPI coming in at unchanged. That was expected to be a negative 0.1% as well, so a beat on both of those. We did see a wet blanket thrown on the Great Britain retail sales by coming in at negative 0.1%, expected to be a positive 0.2%, so not so great there. Also, flash employment change came in at 0.1%, expected to be 0.2%. Now, we've got a plethora of FOMC meeting members speaking today. Quarles, Evans, I think Bullard was speaking, and we still have Powell testifying in front of Congress. So all of that going on. They are able to talk about economic policy in these interviews, in these speaking engagements and things of that nature. They aren't in and around that area where they have to hold off on talking about that. That's about 2 weeks before the FOMC. So they're allowed to talk at free will at this point in time. All right, let's move back over here to the United States and talk about our economic data. We got PPI, which is Producer Price Index. That came in at 0.4%, expected to be 0.3%. Generally speaking, we like to see higher prices paid on that stuff. That shows that there is demand for different products. That driving prices higher should signal a flourishing economy. And then we got core PPI, which strips out food and energy. That came in at 0.3%, expected to be 0.2%. Unemployment claims. More people claiming unemployment right now, coming in at 225,000, expected to be 215,000. Yeah, that's a hard ball to balance, really. We're heading into the holiday season, and people may very well be coming off of the sidelines there and looking for more employment to, buy more gifts around the holiday season. That's not really a surprise to me, to be quite honest. I don't think that that's necessarily a negative. We are still at historical low unemployment, so it's really not that bad of a thing, to be quite honest. Like I said, a bunch of Fed governors speaking. Also, crude oil. Remember last month we had like a 6 million barrel build over what was expected. This month we have about a 7,000 barrel build over expected. So it came in at 2.2 million barrel build, expected to be a 1.5 million barrel build. And that causing a little bit of weakness since that economic data point came out for crude oil. It was approaching that $58 a barrel I've been talking so much about, and we found resistance, pretty strong resistance, as we start approaching those $60 a barrel. That starting to roll over, as we can see on the chart right now. Market kind of feeling a little bit of a toppiness going on, and with this chart pattern set up right there, that's looking a little bit of toppy. You can see we've got a couple of prints there that tested that $58 a barrel, lining up with our Fibonacci's. We got 58, we've got 59, and then value area high is in and around 60. I've been expecting this market to come back down into around this area right here, which lines up with $55 a barrel. I expect the market to kind of trade in and around that, fill in this little bit of a volume node, and create a bigger bell curve there. Because right now, the way that the global economies are looking, remember a lot of this crude oil goes into the manufacturing process. I think that we're going to see some weakness there as there's lack of demand showing up, as we can see with the crude oil builds. Gold futures moving again higher today by about $8. I've talked about this. I think it's going to go back to that $1,500 a barrel area, which is lining up with our volume node here. This is 1,500. I do expect the market to trickle back up to that. Despite the fact that it is above this value area high, we do have our points of control way down here. I don't think that gold is going to go back down into the 13s anytime soon, especially with the weakness in the dollar here. Economic picture looking a little bit fuzzy. Market, I think, is going to build up towards this area and make this point of control move higher to that 1500 a troy ounce area. All right, so that's not in the realm right now, but we can see that we did get a bottom here. That's when I put on that GLD trade, you remember, and expected it to hold 1450. It did. That is bullish. I think the market's going to go up and test that value area high and retest 1500 in the next coming weeks anyway. I feel like I'm going to sneeze, so I might excuse me. Sorry about that, guys. All right. Bonds moving higher again today as we're getting a bit of a mixed bag in equities. I mean, they're toggling back and forth around unchanged, very close to it anyway. Last I checked before going on this video. People really going to be watching what all of these Fed governors are saying in these speaking engagements and try to discern, read the tea leaves as to what they're going to do. Right now, it looks like they're definitely holding off on any rate cuts for 2019. 2020 is really where we're going to be looking. I don't think that we're going to see a rate cut heading into the holiday season at this point. So bonds starting to migrate back up. You know, I've talked about it time and time again. I think that the sweet spot for the bonds is right here at around the 160 handle. So that does also line up with the value area high there. We do have the point of control way down here as well, but I don't think that that is reflective of where the economy is right now. So I think that the market is going to start pushing a little bit higher. It's just been a little overdone. One thing we're going to have to keep an eye on is whether or not it stays in this trend channel, because we have seen consistent lower lows and lower highs. But we are looking like we are going to be testing that little trend channel top right there. So whether or not we can break through and get into that 60s is yet to be seen. That would almost be breaking this top right there. So that's going to be the key top to look for, whether or not bonds break out of this bearish trend going forward. All right, then we got the VIX is moving higher back into the teens. We settled right at 13 yesterday. That was a bit closer to the lows as Powell was speaking throughout the day. The testimony on the impeachment hearings didn't, as far as I was concerned, looking like they were that strong. The market really started rebounding and causing that volatility to come out of it a little bit. So markets did make that move to the highs, as you can see here in the Dow Jones Industrial Average. Yesterday, when we created that move, it was really towards the end of the day, finished near the highs of the day. We are in negative territory right now, but the market is well off of the lows that we've seen from the onset of the day session here. And as you can see, yesterday we did create a new all-time high in the Dow Jones Industrial Average. NASDAQ a little bit weaker as tech is suffering a little bit. One of the things with the Dow Jones, Walmart came out with great earnings. That's going to be driving the Dow Jones higher as well, and giving a little bit more hope to some of that retail sector. You know, everybody's talking about Amazon taking over the world. Well, it seems like there's been a shift. Nike said that they aren't going to list on Amazon anymore. They think that they can do better straight to consumer or direct to consumer, and that caused a little bit of weakness in Amazon yesterday. Nike started getting a bit of a spike, but we are seeing that these retailers, at least the big box stores, are not doing as bad as one would expect. But that is also hurting the tech sector. We do have NVIDIA coming out later on this afternoon after the close. I'm going to be looking to play that for the earnings plays, so keep your eye out for that. I did not play Walmart. I missed out on that one. I was playing around with those strike locations and just didn't really feel comfortable. I wanted to see really where they came out with their earnings in order to trade further on other people's earnings. All right, we got the E-mini S&Ps down 2 points on the day, 2.5 points. It's pretty much unchanged on the day. We haven't seen an all-time high in the E-mini S&Ps like we did with the Dow Jones yesterday, but like I said, the Dow Jones is the blue chips looking to do rather well going forward. This is the day session of the E-mini S&Ps. The gray is the overnight. Pretty mixed bag overnight. I couldn't say whether or not we were really long or short, to be quite honest. But coming into today, we have gotten some push to the upside. Looks like we're making another test for that. This is a good number, the 3102, because that was printed during the day session. That could be a target. It feels like, I talked about this yesterday, this market really is stuck in this bit of a channel here. And if we're either going to pop up or pop down at this point, because we talk about this as well. When you get stuck in this, where we start building up this momentum on a sideways market, it has a tendency to either spike in one direction or the other. We don't always know which direction that is. We can play it by doing straddles and strangles because we don't know, and that's probably the best trade for this type of scenario. I don't have anything added for that, but considering that going forward, I've been sitting on my hands for that trade, but I might be doing that one pretty soon as this rubber band really starts to wind a little bit tighter. I didn't do any earnings trades. Like I said, I am going to be looking to do NVDA and a couple other ones I'm looking at. I think it was Applied Material was another one that might be coming out this afternoon. So those are the ones I'm going to be looking at. But more focus on my webinar today, which is going to be on the short call. So check that out. We're going to be talking about strike location. Yeah, you can go online and figure out how to sell a short call. I mean, and find all the definitions in and around that. But they aren't going to talk about strike location and the type of environment you need to implement that strategy. And more importantly, it may be even than maybe not more important. Nothing's more important than the environment, to be quite honest. But to know whether or not any individual XYZ stock is appropriate to trade options. And that's one of the very first things we talk about is this stock, I may have a bullish or bearish assumption in this stock, but is it options tradable, which is an important aspect to look at that most people won't talk about. They'll just talk about the options in and around any given stock. And if you're a newer trader, option pricing can be a very tricky thing, and I talk about how to combat that as well in these webinars. So check that out at ProTraderStrategies.com. That's all I got for you guys. Hope you have a great day. But go to ProTrader Strategies first and sign up for that webinar. And then go over to Facebook and give us a thumbs up or a like, because then you get access to these webinars almost immediately rather than having to wait necessarily for the YouTube or searching it on YouTube. All right? So if you can't take that, take it easy.